Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors, such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Hi, everyone, and welcome to the RIA Edge podcast. I'm David Armstrong with Informa's Wealth Management Group, and today on the RIA Edge podcast, we got a chance to sit down with Molly Bennard, the CEO of Connectus Wealth Advisors. Connectus is the wholly owned offshoot of Focus Financial Partners, the large acquirer of advisory firms, but brings, as Molly explains here, more of an integrated back office to the teams and practices that want to retain their own branding and their own client-facing identity. The firm has some $7.5 billion in AUM in the U.S., as well as a significant presence in Australia and the U.K. This conversation took place at the RIA Edge West Conference in Marina del Rey on September 28th, which is why the audio quality is a little bit choppy, but I learned a lot about the firm, and I hope you do too. Thanks for listening. Molly, thanks for joining us.
Wonderful to be here.
I think maybe we'd start out by you providing maybe just a brief background on maybe your tenure in financial services, how you found Focus, how you found Connectus, and what Connectus is, where it exists in the ecosystem of wealth management.
For sure. So I've been in the industry for just about 20 years now. Started out my career in the financial services industry from the beginning. I am an accountant by trade, so started my career at PricewaterhouseCoopers post finishing school, and worked in the insurance industry for quite some time. So, I was started as an auditor, and then I moved into what they call transaction services, so working on M&A. Spent a few years doing due diligence on transactions in the financial services space, so expanded from insurance to banks, broker-dealers, various insurance companies, as well as brokers and asset managers. And then, after putting enough years in the accounting world that I decided I did not want to go any further, I transitioned into the M&A space more formally as an investment banker. So I worked at Morgan Stanley for quite a few years in their financial institutions group, covering all types of transactions, both in the insurance, asset management, and diversified financial space. And spent a brief amount of time with a shift in career going to AXA. So I worked for the U.S. division of AXA, which is now called the Equitable. And that's really where I got introduced more formally to the wealth management and RIA industry. A big part of my job, I was actually the head of strategy at AXA, and a big part of my job was working with the CEO of AXA and the rest of the international management team on thinking through what they call distribution strategy, right? So how do you introduce insurance products into a wealth management relationship? Because of course they were an insurance company and looking for ways to distribute product. So got pretty involved in understanding the mindset of advisors, what drove them, what their model looked like, and also, how the interplay between, standard investment management, financial planning, and then other products and services like the insurance world. And that's really how I got introduced to Focus Financial. A colleague of mine, introduced me to the team, and they thought the role at Focus would be a perfect combination for me, who had, an accounting background, an M&A background, a strategy background, and Focus was looking to, at that point, was quite small. So that was almost 9 years ago. Okay. So Focus was looking to grow and wanted, to add to their senior team. And so my skill set lent very well to the role, which was a combination of business development, relationship management, and M&A deal execution. So I joined Focus, and I've worked with, over the years, had worked with many, many of Focus's partners and executed transactions in the United States as well as in Australia, which I helped lead and build Focus's Australian presence as well. Things were great at Focus, and, we continued to grow. But, as we continued to grow, the industry continued to evolve. And, I think really that's where Connectus was born. It was born, let's say in an appreciation for the change in the industry, both from a client preference perspective, but importantly from what we were hearing from advisors in the industry. And the idea of Connectus was actually born in Australia. Virginie, one of the co-founders of Focus, and I spent a lot of time on the ground there and started listening to what advisors really wanted. And what we were hearing from them is that, some businesses are not $5 billion wealth management practices. They're, smaller boutiques, anywhere from, 300 million, 400 million to a few billion in assets. And as they continued to grow, what they started to realize is that being standalone was becoming more and more challenging. There's, of course, the succession planning challenges that are here to stay in the industry for quite some time. But the other challenges they were, encountering were growth, resourcing to scale, and then also resourcing to be able to address clients' needs. So, we saw the industry changing from a client perspective where clients are expecting more from their advisor. Mm-hmm. I'm speaking a little bit later today, and we're probably going to end up talking about, are the days of portfolio management only or, investment management only over? Mm-hmm. And, I do genuinely believe that for an RIA, being portfolio management only is not going to cut it in the future for any wealth management business. You do need to have a more comprehensive model, and things are becoming table stakes. Mm-hmm. So many of these boutiques were realizing they couldn't do it alone. From a management perspective, from a resourcing perspective, from a service model perspective. And so Connectus was really born out of that realization that the Focus model at the time, really had two options. One was big, large platform investment, right? Oh. Standalone, independent, Focus was there to support from a consultatory approach. But
the firm would keep its own independence, and keep its own identity and be its own
operation. Or the other option was merge into an existing Focus partner, which is full integration, mm-hmm. right? So what we found was in this
to
world,
that partner.
Exactly. So what we found was that you had these two options: aggregation, which is really the Focus, what they call the direct deal, the partner firms, mm-hmm. or full integration, which is basically tucking fully into an existing RIA, existing Focus.
What do you might call it, a sub-acquisition?
Exactly. Sub-acquisition is another word for it. Tuck-in, sub-acquisition, full merger. So what we realized is there was a space in the middle where Focus didn't have a solution, and we realized there was actually quite a few advisors in the market, not just in Australia. That's what we were hearing there, but we started hearing it everywhere globally, in Canada, in the UK, in the United States. And so we realized that there was another model. Think of it as a hybrid of the two. If you think of one, there are two bookends of a spectrum. Mm-hmm. Connectus was really born in the middle. So if you think about the Connectus model, what we do is we actually centralize all administration, all back office activities for the wealth management business that joins us. So that includes everything from HR, administrative HR, benefits, policies and procedures, to things like compliance. We are one RIA, to IT infrastructure, including our cybersecurity program, but it also includes all of the technology and tools that we built, which are really unique, and I'll talk a bit about those, mm-hmm. to internal financial reporting. So all administration is centralized, right? And as you move up the spectrum to getting closer to the client, it becomes less and less centralized. So if you look at the front office, client relationships, managing their money, financial planning, client service models, et cetera, et cetera, et cetera, all of those things are, fully in the hands of the entrepreneurs and the advisors who join us, so they have autonomy. But as we get towards the back office, it becomes more and more centralized. So think of that as like a spectrum, right? So we have some middle office activities that we've centralized, but a lot of the front office activity of the advisors mm-hmm. is fully in their hands, mm-hmm. as including their brand and identity.
Okay, so they do keep their own brand.
Yes. So if you look across Connectus today, we have 17 brands. Mm-hmm. 2 of the brands are actually Connectus brands. So we have Connectus Private, which we launched this year, mm-hmm. and has, with the addition of some advisors from banks and wirehouses. Mm-hmm. But we also have Connectus Accountants, which is a centralized accounting and tax organization to support all of Connectus. Mm-hmm. But then the other brands within Connectus are the existing brands of the firms we invested in, right? So they continue to maintain their identity. And so they continue to work with clients the way they always had. But what they have is a centralized back office, centralized administration, access to additional capabilities, everything from, as I mentioned, accounting and tax, mm-hmm. to lending, to insurance, to trust and estates, to dedicated financial planning resources, and as well as a really, really unique technology platform. We call it our engagement platform, and it is called My Connectus.
My Connectus is something you developed in-house.
Exactly.
For all of the firms that join you.
Exactly. So my colleague Amy, who you were just speaking with, she is the architect and mastermind behind My Connectus. And we built it to be honest, from a Focus perspective. Working at Focus, Amy was working at Focus with me when we launched Connectus. And, we realized that we could build something that addressed all the pain points of what we saw, not just our partners have at Focus, but what we were seeing in the industry. Right. So what we've done with Connectus, without having the legacy of being an existing RIA, with all of the challenges that come along with that, is build something fresh with the technology, the tools, the processes, and the right people to effectively deliver what we know advisors need.
Okay.
So My Connectus is a fully integrated engagement platform where both the advisor and clients have effectively a single source of truth, where they're engaging with one another and they have access to all of their relevant information, everything from their financial plan and core documents to performance reporting. And so we're really excited about it. We do not believe anything like this exists in the industry at this point. And all of our advisors at Connectus are integrated and transitioned over to the tools that we have available for them.
That's interesting. I've got other questions here, but you've raised something interesting with the Connectus platform, because you're right. I mean, I think of client portals as being the thing that kind of exists out there for the client, and then the advisor has their own dashboards back here.
Exactly.
But what you're doing is bringing them kind of together into one.
Yep.
I love that. With the place of truth.
Single point of truth. It's basically a single pane of glass where the client logs in from one side, but the advisor logs in from the other, and they're actually in the same place together. Versus, as you just mentioned, this bifurcated client portal, advisor, CRM, advisor portal, and all these other systems like the custodian or the performance reporting software or your financial planning software. So you're logging into all these different things. That's the advisor's day-to-day. That's generally what we see. My Connectus actually brings it all together. So everything sits in one place for both the client and the advisor. And they're basically sitting in the same place, just different logins, of course, because they have different views. And it is fully customizable for the advisor and the client. We built a lot of flexibility, which allows us to scale as we continue to invest in businesses, so that the advisors on the front end can still deliver the client experience that they used to deliver, only better, and have that flexibility to do that in their own way, right? So we're not forcing every advisor to follow, to use the same exact reports, the same exact formatting. They can customize for what works for them and their client, but they are using the same tools, the same processes, but it is customized at the client level.
And obviously white labeled for their own branding. And
exactly. Yep. We are co-branded, so all of the Connectus advisors are co-branded Connectus partners. So if you go to their website, you would know that they're part of Connectus. But yes, the client-facing materials are co-branded, but with the advisor's brand on the front.
Yeah, that's fascinating. And you centralize then investment management?
Good question. A lot of the middle office capabilities are centralized. So things like over time research and trading, it doesn't happen immediately, but over time, some of those middle office activities. But, we do recognize that investment management is core to the value proposition of the advisor, right? And we are not looking to change who they are. We actually celebrate the fact that, across Connectus, we have a lot of differences, and those differences can lead to more service offerings, better outcomes, new ideas, and ways for us to, deliver more to the client. So, in no ways are we asking the advisors to, manage money in a certain way, but we are bringing them together so that they can work together, and we centralize when we can to create efficiencies. But from an investment management perspective, each of the brands that join us still manage money the way that they did before.
So this is a conference focused on growth, and the RIA Edge platform is focused on growth. You have been growing. It strikes me that a lot of the conversation here is around choices that you have to make.
Yes.
You've made a choice to develop this Connectus platform.
Yes.
Put resources into that. Did that take away a little bit maybe from attention that might have been paid in the marketplace going out and acquiring other firms? How do you decide which of these levers to push and pull? Do you know what I mean?
Yeah, we kind of do all of it at the same time.
Yeah.
The reality is Amy and I were both building Connectus and working at Focus and executing deals and working with existing partners. We were just doing it all at the same time. It's a lot of extra time. Of course, it's late nights, especially for me with Australia, but we do both. In the end of the day, we're obviously now no longer at Focus. The two of us transitioned, both of us over a year ago. But in the end of the day, we're building something that we really believe in, and we know that it's where the industry is going. So we did quite a few deals very quickly. in 2020 to 22. And so the last, I'd say about 9 months or so, we really have spent integrating and also hiring. I've made some strategic hires at our team and building the organization for scale so that we can continue to acquire and invest, and then more importantly, continue to support the organic growth of the firms that we acquired and invested in. So organic growth for us is just as important as M&A. It's actually more important than M&A, but we were created by a M&A organization, right? But we are a functioning RIA, and so organic growth is the key to everything. And when I say that, one of the things I always say to the advisors who join us is our focus is on sustainable growth. Right? We're not in the business of quick wins. We're in the business of creating repeatable processes, right? So a big focus of what we do with the advisors is help them organize their day-to-day and organize their way that they approach business development so it's repeatable. And so a big part of that is giving advisors the tool, hiring the right people. And giving them the right training and perspective so that they can be effective in their roles.
When you're out there in the marketplace and you're looking for advisory teams to bring on board, what are some of the characteristics that you look for? Because I imagine you got to look for someone who is willing to buy into this Connectus.
Yeah, the value proposition. Yeah. I would say...
which might mean for a lot of them kind of ripping up their own cords, right?
In some ways, it is change. It's definitely change. The focus model, the whole beauty of the focus model with large, RIAs was no change, right? It's very minimal change. The Connectus model does involve, now I wouldn't say it's definitely not change like you're merging into one big business and everything changes on day one. So, you don't have that end of the spectrum of full integration. But it does have a good amount of integration, so there is a decent amount of change to expect. So we manage that by being very open and transparent around what to expect and take each of the investments that we make, the principles, we take them through what to expect over 3 months, 9 months, 6 months, 1 year, 18 months, etc. We have a roadmap that we follow.
So there's a template, there's an onboarding thing.
We're very process oriented as an organization. Yep. But we do very much focus on organic growth and training our advisors as well. So we do both, and that's effectively where we spend our time.
Do you so again, I'll ask it when you're out there looking for firms.
What's the ideal? So quantitative and qualitative is what I would say. There is a size that we're not investing. If you look across Connectus, the businesses that we invested in, they're not small, little, tiny 2-man businesses that have 2 advisors and 1 client service person. Yeah. If they were that, they would definitely be potentially an opportunity for Connectus Private, where we have a bit more centralization. It's almost like a plug-and-play solution for advisors looking to find a new home where they have their own office, but everything else is handled by us,
so
right?
That's almost like a hire.
Exactly. That's more of like small little book of business. They want to have flexibility in their client service model and how they manage money, but everything else, like they don't have the resources, so everything else is plug and play. That may be Connectus Private, but if we're looking at an RIA to join us, it would be an RIA that has a bit more size to basically handle its own office. That's the way we think about it. So if you look across Connectus, our bread and butter profile from a size perspective would be $750 million to about $3 billion in assets. So there's quite a big range. Yep. But the reality is it's the qualitative factors that make them the right fit. So there's a values aspect, which to your point, they have to have the mindset of, I need resources. I want to be part of something bigger. I do believe there's a better way. And I'm willing to row in that same direction, right? So very much, the mindset is basically like, I want to be part of this organization, and I'm really excited about the values that they can, the value that they can provide to me, and willing and able. My team is willing and able to join in on this. So there's a mindset aspect, but there's also a needs aspect, right? So where we see, from a Connectus perspective, we can actually really drive significant results with the team. So, we look at there's an ethos, and then there's a, synergistic combination aspect where we say, wow, this business could really benefit from the Connectus group and all of the resources we have to play. And we see the lift that we can create to that business and then the growth potential that comes from there. So we are looking for advisors that want to grow and that want to take advantage of our resources. If they just want to sit and do their own thing and not talk to us, not a fit.
Not a fit. Right.
Not a fit.
Right.
We're not making passive investments. That's not who we are. There's other players out there that do that, but we are very open and transparent that, we're going to get involved. Our team is going to be talking to you every day, some different members of the team, but you're going to be engaging with us on a daily basis. We're going to work on how to, accelerate the business forward. Each of the businesses that we bring in, our program is actually called Accelerate. So we take them through that journey of centralizing the back office first, transitioning them, onto the right tools and technology, working with them on people management, organizational design, compensation design. So we really spend that time with them on bringing them through that journey, training the advisors on, business development, giving them the right tools to be effective in their job, giving them career paths.
Okay.
So we have a program. It's our own proprietary program that we basically follow with each investment you make. So having the right ethos is like super important, because if they don't, our ability to execute is very poor.
So you're filtering these folks out early before the conversation proceeds any further. You know.
We've been doing this a long time.
Yeah.
So, obviously from the focus perspective, you're talking to people on a day-to-day basis around their business.
Yeah.
And, once you learn, one, about their business, and two, about the way they think about the business and they think about their future, if this person's going to be a good fit for us or not.
Another thing that we're talking about here at the conference is capacity. What do you see going forward as the pace of partnerships or acquisitions going forward? Will it match what you've done previously? Is it getting more? Is this snowball getting bigger as it rolls down the hill, or is it? Are you finding fewer opportunities? Where do you see it going?
There's no shortage of opportunities in the marketplace, that's for sure. I don't think from our perspective, and Focus's perspective, there's been, of course, a slight decrease in M&A activity. All the statistics that the custodians and everyone and the bankers release shows that, but the amount of succession planning that needs to happen is just so high that there's no world where M&A is going to really trickle down to nothing. I mean, we expect to be quite busy for a very long time. And we expect to see different types of M&A. There'll be what I call internal M&A, meaning, Focus is a pretty big partnership. It's very possible. We've actually added 2 legacy Focus partners into Connectus.
Okay.
So that will likely continue. So that'll be one type of M&A. Then we'll have external M&A where we're investing in existing RIAs. And then the third channel will be advisor recruitment, which is obviously very important to us as well. And that will likely be not just through Connectus Private, but also through the brands in which we've invested. And then organic growth. So those are really like the key components. And we have a pretty robust organic growth plan and program. Okay. So, we're going to invest in both. Can I say that we're going to do the same exact number of deals in the same amount of time? Hard to say. I wish I had a crystal ball.
Sure. But do you feel that you're at capacity though?
No, we have capacity. You can... Yeah. We're ready to go. We've got, a really strong team. I had the luxury of picking who I wanted to bring along this journey with me from Focus. And Focus was very supportive of that, of course. It is a wholly owned subsidiary of Focus. Mm-hmm. So I have a stellar team, and we've continued to add to it over the last couple of years. So we have a great team to support the growth that we'd like to see continue at Connectus.
So one of the topics here obviously is M&A and growth through acquisition. I hear you hitting this note of organic growth a few times. Mm-hmm. You have some sort of plan there. It doesn't get as conversation as much at places like this.
Because M&A is more sexy.
Yeah, M&A is sexy. And it's
organic
bigger,
growth
right?
is harder.
M&A is a big leap with a one-time event.
Yeah.
Organic is like a small trickle.
Yes.
So what is the plan for organic growth at Connectus?
Yeah, so we have a couple different levers that we've effectively are pulling at Connectus. So we are part of custodial referral programs. So we certainly are leveraging those, and that is a big part of our strategy, of course, is to how to maximize our presence in the referral channel, as well as have the right services to offer within that channel to generate the best leads possible, as well as to retain those clients, right? So that's one aspect. Another aspect is other lead generation programs. So, things like Zoe and Smart Asset, et cetera. So we do participate in those.
You're taking full advantage of all those
Totally.
platforms.
And we have processes and technology that we put in place to manage that. So that's another aspect. We are doing some kind of digital, social marketing as well, to generate leads. So, we are, our marketing team is executing on that. And then there's the good old fashioned, old school business development,
right, right.
COIs, client referrals, getting out in the industry, building, visibility of the advisor and what they do, and bringing new clients in. So we train our advisors on that, and try to give them, the best tools that we can, so that they're more effective in their role. But all of the above, are things that we're doing. So we're very focused on that.
It sounds to me like this Connectus platform is something that could be licensed out to other non-Connectus
Good question.
firms. Is that on the roadmap?
It's not in our immediate plan, but what I would say is yes, potentially it could be. It would likely be first offered internally to focus partners. That would be the first stage. And then who knows, maybe we would consider bringing others, who are not part of our network, not part of Focus, under the fold. But at this point, that's not on the immediate horizon. We're more focused on, our advisors, and then, of course, how we can support Focus Financial Partners. So all of those partners, as, our sister companies.
Sure.
Yeah.
And I would like to kind of just end on this. Where does Connectus sit in the Focus group now? What is the relationship there? Because I was always under the impression, speaking to the Focus folks beforehand, that something like Connectus was the plan early on, right? Where you find different teams with different skill sets, and they will operate independently, but there's
really integrate the most you can.
There's opportunities for synergy between skills, right?
Yes.
This person's good at investments, they're good at something else, and this person over here is good at planning, and we're going to just, seed it all.
Yes.
And it sounds like what happens is that some of the acquisition targets were so large that kind of becomes more difficult to do.
Yeah, I mean, at the Focus level, the existing partners are very much separate.
Yeah.
There isn't that cross-pollination of skills and resources or any type of centralization at all. That is not the Focus model, or had not been. Connectus represents like the evolution to that. The industry as well, if you look at the industry today, I think there's a realization that scale matters, and that value is created by bringing the best of the best together and figuring out, how do you create a whole that's greater than the sum of the parts, right? And so that's really what Connectus is about. Is
Connectus still wholly part of the...
Connectus is a fully owned subsidiary of Focus Financial Partners. Okay. It is effectively it's the only Focus Financial partner that is really fully controlled by Focus. But it is an RIA, so it is a standalone business, with our own management team and governance and decision making. So, it is run as a completely separate organization. Yeah. But one could argue it's a little bit closer to Focus than any other Focus Financial partner. Yeah. And, Focus has a better window into the day-to-day, given the fluidity of, one, the legacy employees and myself and Amy and some of my other colleagues, but also the fact that because it is a fully owned subsidiary, there's a bit more transparency from a day-to-day perspective on what's happening in the business. Sure.
And I know you said that, I said I was going to end it, but one more question. Launched in Australia.
Yes.
Australia is the market that seems to me to be the most similar to the U.S. in terms of the independent advisory space. Is
Interesting.
that true or not? My impression, I could be wrong.
Yeah, well, what I would say is I think probably Canada might be a little bit more similar, although Canada is very investment management driven and Australia is very financial planning driven. But Australia has slowly, over the years, they're still very much behind the United States, but has slowly shifted to more of what I call a quote, I'm putting this in quote, independent, because in Australia, that's a word that means something different than what it means in the US. But it's moved more towards a fiduciary advice model, unaffiliated with institutions. So it historically was very institutionally aligned. So all advisors sat in banks and they sold bank products. Yeah. And that was the US many years ago.
Sure. And it's still kind of Europe today.
It's still, yeah, exactly. Europe's very much like that. And so Australia has kind of followed the suit of that disintermediation of the advisor, product, and bank. And so all that's separating out, but they're very much behind the United States on that. And the industry is very, very boutique. So a lot of small boutiques that are around in the industry versus in the US, what we've seen is scope creep and, all these big RIAs that have developed over time because they've had more years to do it, right? So I would say Australia is behind the United States, but a very attractive market for sure. And very much going in the direction that we like as a fiduciary in the United States. It's a fun market.
I'll bet. Will you see more? Do you believe you'll see more RIAs or some of the large RIAs from the U.S. gravitate to that market as well because of the dynamics you just sketched out?
They would have to really, it's hard to say, to be honest. I know there's, a couple players have gone over there. Merchant, I think, Emigrant, have gone over there with more like passive minority type of deals, investments, or, hiring a local team. There's a big Italian fund provider that created a wealth management aggregator down there. But it is a completely different market from a regulatory and business perspective. So while some of that high level, like visionary type of things around where the market's going, et cetera, is similar. The actual how the sausage is made is very different. And you really need to know the industry very well, and it takes a long time, I would say. I think I've been to Australia 27 times with Focus since I've joined Focus. Been in the Focus family, so I actually did the math. I think I spent over a year in Australia in 8 years.
In aggregate, yeah.
So, you'd have to be really committed to the market to learn. And of course, we were very committed at Focus, and, we put the time and effort in to build our presence, and now we're a pretty big player in that market. But, any RIA wouldn't be smart. It'd be too expensive and time consuming to go ahead and do that. So you need to really have that commitment.
And needless to say, growing market in Australia, but you see the real opportunities here in the U.S. Do you think? Will the U.S. be your main
The U.S. will be
driver
our primary market. It always was and always will be. Right now, international is less than 25% of Connectus. It's maybe about 20-25% of Connectus. Of Focus, it's a much smaller percentage, more like less than 10, 8 or 9, 10%. Let's just say. International will never be the main focus. It will always be the U.S. The market here is just huge, and the opportunity is very high. So there's lots here at the front of at our doorstep. So really don't have to go too far. But we've built the presence. So we'll certainly continue to support our international approach.
Fantastic. Well, Molly Bennard, CEO of Connectus, thanks very much for joining us.
Thank you.
Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors, such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.